Today we're going to talk about Intuit. We'll go over a few different numbers behind the company like their revenue, EPS, and shares outstanding. We'll also go over a fundamental change that occurred in their business almost 10 years ago that is still affecting their valuation today. And finally, we'll talk about their valuation as well as their EPS numbers that are expected over the course of the next 2 years. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Let's start off by taking a look at their chart. We can see that Intuit in 2021 was trading at almost $700. However, over the course of the next few months, the stock price fell almost 50% to a low of around $370. However, since then, we have seen the stock go on a run up about 70%. And over the course of the last 5 years, the stock has produced a total return of 141%. And in the last 5 years, Intuit has done a very good job of increasing their revenue. We can see at the start of 2019, they were bringing in a trailing 12-month revenue of $6.3 billion. That has since over doubled to $15.1 billion of trailing 12-month revenue. And EPS has almost similar growth. We can see that at the start of 2019, they were bringing in around $5.25 of trailing 12-month EPS. That has since gone up to around $9.78 of trailing 12-month EPS. If you noticed anything particular about these graphs, it's the fact that there is a large increase in EPS and revenue in the April quarter of each year. And that has to do with the cyclical nature of taxes. Intuit is a tax providing company. And when you think about when individual taxes are due, they are due in April or the first quarter of every year. And that results in Intuit having these large spikes in their EPS and revenue numbers. So with all of that said, there is one fundamental change that Intuit has made a decade ago that has affected their business and their valuation immensely. We can see here in the July quarter of 2015, there was year-over-year revenue growth of 54%. And prior to that, they had a number of quarters where revenue was actually declining. However, since this time period, almost every quarter has experienced year-over-year growth for Intuit. And that trend is a little bit different for their EPS numbers. Prior to 2015, every quarter for the company was negative besides their April quarter. However, in 2015, they started reaching profitability in these other quarters between tax seasons, and that has only improved year after year for the company. And that fundamental change around Intuit's business model was a subscription model to QuickBooks. This was being pushed out to small businesses, encouraging them to subscribe to QuickBooks and pay monthly fees for that subscription. And they were seeing tremendous growth in 2014, 2015, and 2016. We can see in this quarter alone, QuickBooks subscriptions grew by 40% year over year. In the following quarter, QuickBooks saw their subscription growth accelerate to 43%, with a total number of subscribers hitting almost 750,000. And that growth did not slow down. They grew 50% in the next quarter, adding over 100,000 subscribers in a single quarter. And not only were they adding subscribers, they were also building out their ecosystem around QuickBooks, adding products to QuickBooks that these small businesses could utilize and incentivizing them to stay on the platform. And one of Intuit's more recent acquisitions was MailChimp, and this was directly related to QuickBooks. They wanted to integrate MailChimp into their software to allow small and mid-sized businesses to better advertise to their customers. And what all this has allowed QuickBooks to do is build out a market share of over 80% for small business accounting. Not only has this been a change in the fundamentals of the business, but this has also affected how investors value the company. We can see that prior to 2015, valuations were anywhere from a 20 to 30 PE ratio. However, after this change in the business model, we see valuations trended up for a number of years from 30 all the way up to 50. And more recently, we are seeing Intuit trade at a PE ratio in the 60s. And that's for their trailing PE ratio. We can see on Yahoo Finance, their trailing PE is currently sitting at a 65.8, and it's kind of trended around there over the course of the last year. Its forward PE ratio, however, is sitting at a 30.58, and it's trended anywhere around that number down to a 28.9 back in April of last year and up to a 38.7 in January of this year. And there are two main reasons why investors love subscription-based businesses business models. The first is around the numbers. When you think about a business like Intuit that has a very cyclical nature to it, it can be difficult to predict their numbers, especially because they all come down to one quarter per year. However, with them smoothing out some of their revenue and EPS numbers, this helps investors get a better idea of where the business is trending over the course of the year. And we saw this with Apple as well. Apple was very focused on one quarter of the year when they released their new iPhone. However, over time, they've gotten away from this by offering other services that have helped smooth out a lot of their revenue and EPS numbers. And the second thing about subscription models is that you get people into your ecosystem. Again, Apple does this very well. Intuit also does this very well. You're talking about getting customers associated with using your platform and being comfortable with the services that you provide and using multiple of those services. When you build out a model like this, where these subscribers are consistently using your products over time, they will tend to always go back to and rely on you as their main source of this service. And that is something Intuit again has done very well with their tax software, especially with small businesses, as well as Apple has done well with customers continuing to buy new iPhones and use the technology that is built out within them. And ultimately, this ecosystem effect helps their EPS numbers. We can see that last year they put up $14.40 of EPS, and currently analysts are expecting them to put up $16.40 of EPS in 2024. And they're expecting that number to grow again in 2025 to $18.87. And when you build out a model like this, you have a certain amount of pricing power and ability to raise your prices without losing customers. There's small incremental changes that you can make where customers will not be turned off by pricing increases. They will understand that it is just part of inflation and other things going on. And that is one thing, again, that Intuit has done very well over time, is making sure that they offer software and additional services that really attract customers to their higher tier products and thus increase their EPS and revenue numbers. The only slightly bad thing I could find with Intuit is their shares outstanding. They were doing a very good job of decreasing their shares outstanding through till around 2016, 2017. However, since then, they have actually increased their shares outstanding. One thing to keep in mind with all of this is the fact that as they have built out this ecosystem around QuickBooks, they have had to acquire a number of different companies. And what they have ultimately done is they have offered stock to actually acquire these companies. And that has thus increased some of their shares outstanding. So they've done a good job of this and they've been very strategic about it, which I do like, but I would like to see them get back to decreasing their shares outstanding. As of making this video, I do not own any stock in Intuit. I do like the company a lot. The problem I have foreseen with it is really that it's ran up over the course of the last 6 months, and I haven't paid a whole lot of attention to their business model until more recently. And I've been trying to buy it on a dip, and I might just add a couple shares now, and if it drops further, maybe add a few more and start building out a position over time. But do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. But with all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. Instead of a joke today, we have a quote. The best time to plant a tree was 10 years ago. The second best time is now. Thanks for watching.